These are the 14 most common mistakes people make when filing their tax returns in Portugal. New tax laws introduced in Portugal in 2023 are making this tax year feel a bit daunting. The cancellation of the NHR regime, new tax laws on cryptocurrency and investments, and it becomes especially complex if you are a US citizen residing in Portugal. Therefore, it is very important that you choose a competent tax expert that truly understands how international tax treaties work. So today I am in Lisbon to sit down with one of the biggest tax firms, Fresh Portugal, to speak with their tax experts to discuss the most common mistakes that could end up being very costly and, in the worst case scenario, in jail. Fresh Portugal specializes in filing Americans' tax returns living in Portugal. There will be a link in the description below to their website. But some of the things listed in this video will apply to any foreign nationals living in Portugal for more than 183 days of any given year. So let's get right into it. Becoming a Portuguese tax resident by accident.
So, the first mistake that we're going to talk about today is about becoming a tax resident by accident in Portugal. And there are two ways that you could go into this direction, and it's basically by becoming and assigning a certain tax residency in Portugal without intending to. And the first way to go into this place, it would be by changing your address associated with your tax identification number, your NIF. And although some people don't realize, but in this moment you're communicating to the tax authorities that you have an address here, and then you are deemed as a tax resident from then on, which means that you must file a tax return for that specific period of time. And the other way to go to this specific place of tax residency by accident, it's by owning, for example, a house or fulfilling one of the criteria in law, even if you haven't changed your address associated with your NIF. It's quite common in our experiences that people that buy houses in Portugal and they register these houses as primary residencies, that they become tax residencies in Portugal without realizing it in the first moment.
Declaring entire year of taxes instead of partial.
So, from April to June, it's mandatory for you to file your Portuguese tax return regarding the previous year. However, you must pay attention what time of the last year you should report your income, worldwide income. It's not the entire previous year, it's just from the moment you became a Portuguese tax resident to 31st of December of the previous year. So imagine that you change your NIF's address last August 2023. So this year you file your tax return in Portugal regarding August to 31st of December 2023, not the entire 2023 year.
Unnecessary reporting.
So, when we are talking about mistakes on tax returns, we can also refer to the fact that a lot of people report their bonuses or unpaid salaries or any kind of remuneration derived from work that they have performed in the past when they were not tax residents in Portugal. If the tax treaty with the country where you were living and working, where you derive these unpaid salaries and bonuses, allocates the tax rights to the country where you have performed the work, it means that you shouldn't be reporting them in Portugal, even if you get paid this past salaries or past bonuses while you are a tax resident in Portugal. It means that they should be reported and be taxed in the country of source, the country that you have performed the services.
Failing to apply NHR.
So you are here in Portugal and you have the NHR status. So take a minute and please double check if you do have the NHR. Go to your tax portal and print your NHR certificate, because you can have the conditions, but please sure that you apply correctly for the NHR. So if you arrive in Portugal in 2023, you have until 31st of March 2024 to apply. If you apply for the NHR, perfect. However, during your tax return, you must claim the NHR benefits. So during the tax return, you have a lot of annex. So depending on your kind of income streams, you report, and then you have a special annex for NHR holders called the Annex L. So don't forget to always file this Annex L.
assuming capital gains are exempt through NHR.
Another issue that comes a lot through our office, through our clients, it is concerning the fact that we have a lot of NHR holders in Portugal that assumes that the capital gains derived from the selling of securities should be exempt with the benefits of the NHR, and that it's not 100% accurate. The fact that the NHR grants an exemption on capital gains categories of income, it has a condition that the country of source, the country where this capital gains comes from, should tax this income. However, it's not that common that tax treaties normally allows the taxation of the capital gains in the country of source, but solely in the country of residency. However, in the case of the Americans that are watching this video, probably you know that due to the saving clause, the United States will tax all of your income throughout your life, no matter where you live. This is also applicable to the capital gains derived from securities. So, although you should have the exemption from the NHR on the taxation of these capital gains, it is not an assumption that tax authorities do in Portugal. So, if in your tax returns you report capital gains derived from securities, even if you request the exemption from the NHR through the correct route, the tax authorities will assess your tax returns information and will give you one assessment with the taxation of the capital gains. If you want to claim in the correct path the exemption on these capital gains, you must either go to the arbitration center or to court through a lawsuit and request the application of this exemption derived from the NHR. That should be something applicable by the tax authorities, but it's not.
Ignoring the new rules on short-term capital gains.
So that's something new for the 2023 income tax returns that will be filed this year, and it refers to the changes that now are applied to the short-term and long-term rules for capital gains that are being applied in Portugal. And this new rules refers to the fact that short-term capital gains, or they are also called speculative gains, derived from the selling of securities, will now not be taxed by the very well-known 28% flat rate, but rather being aggregated with all your other streams of income that should be aggregated and be taxed by the progressive rates, depending. The marginal rate will be accordingly to the bracket that you will find yourself. So if you are in a high bracket, if you have a certain level of income, you should pay attention to the selling of these securities. Try to hold them for more than 1 year, because then the 28% flat rate is still available. However, if you hold these securities for less than 1 year and sell them, you will need to aggregate the income and it will be taxed by this progressive rate.
Converting crypto to fiat currency in under a year. Portugal was famously a tax-free zone for crypto, but in 2023 that all changed. Now, if you hold crypto for less than 365 days, it will be taxed at a flat rate of 28% on capital gains when converted to fiat currency. However, converting cryptocurrency to a stablecoin pegged to a fiat currency will not result in a capital gain. However, any cryptocurrency held for a period of exceeding of 1 year, if sold, will not be subject to capital gains tax. Note also, if and when you stop being a tax resident in Portugal, an exit tax of 28% will be imposed on all crypto assets held at the time of difference between its market value and its acquisition value determined through first in, first out accounting method. Combining tax losses with special rates.
So the tax legislation here in Portugal allows you to use your capital losses, meaning you can use your capital losses for the next 5 years here in Portugal. However, when you have the future capital gains, to use the capital losses, you cannot use the special 28 tax rate. It's mandatory for you to aggregate your gains with all your other incomes to be entitled to use your previous losses. So be aware and do the math. If you have capital losses, please keep track of that, and when you have the capital gains, you must use the aggregation method here in Portugal and use the Portuguese tax and progressive rates, not the 28 flat tax rate. This also applies for a company that's not yours.
Using an S Corp.
First of all, what is an S Corp? It's sort of an entity that is really your own business, but it splits your income into two things that are not really your income, into a salary and into profit. So your hypothetical income that would have otherwise just been self-employment income becomes a combination of salary and profit. Now, the reason that Americans love to use S Corp so much is that the profit is not subject to Social Security. So accountants recommend it as a way to reduce the US Social Security bill. However, in Portugal, S Corp completely blows up in terms of the local Portuguese legislation. The salary part is probably considered a salary in Portugal as well, because it's salary, it's wage, although you receive it from yourself or an entity that doesn't pay corporation tax, which is something that doesn't exist in this form. But a salary is probably indeed a salary. But because you do the work from Portugal and it's a wage, then according to the tax treaty, taxation is due in Portugal. So if there was withholding in the US, you need to go on and claim it back, and then you need to go on and pay your taxes in Portugal. Now the tax is okay, it's not really a problem. You can report your salary income in Portugal and pay tax as a wage, but what happens to Social Security? You can pay your own Social Security in Portugal, but what about employer Social Security? So to employ a Portuguese tax resident, the S Corp will need to register in Portugal as a branch or as a permanent establishment, and then pay so that they can pay Social Security. So you need to take the corporation through a registration process, or use an employer of record, which is a company that provides employing services and charges fees for it. So the salary is hard and complicated to pay. Oh, and then there's, because you pay Social Security in Portugal, you can claim the exemption in the US, so you need to go and get a certificate that you paid Social Security in Portugal so that you can introduce it in the US. So, and that's the easy part. So you've paid salary and you paid some taxes in Portugal, and you went and you claimed them back in the US, and that's the easy part. Okay, now you have the distributions, and a lot of people are expecting distributions from an S Corp to be considered foreign sourced income. However, if the S Corp is essentially you, and you don't have other partners in it that are based overseas and are running it, and you're running your S Corp from Portugal, then tax residency, there's also corporate tax residency, not just individual tax residency. So in the corporate tax residency shifts. Companies are like people. They can be born in one country and live in another. And corporations live where the management is. So if a company like an S Corp was born in the US, but the manager lives and operates solely from Portugal, the corporate tax residency shifts to Portugal. And that means that the Portuguese tax authorities could question why isn't that S Corp registered and paying corporation taxes in Portugal, and go after the S Corp for the corporation taxes. Equally, when you take distributions from that S Corp, because it's a Portuguese tax resident, the Portuguese tax authorities could and would, if they realize what you're doing, consider it to be a Portuguese company and fully tax these distributions. So your income from the S Corp, instead of being fully transparent and not paying any taxes in Portugal as you think it might be, could be subject to both corporation taxes, registration, and dividend tax altogether. Overall, yes, some people use S Corps and get away with it, but the risks are enormous, and we don't recommend them to our clients, except in very, very specific circumstances where the S Corp has management overseas and you can prove it, and there are solutions to pay the salary and so on and so forth.
Using a single member LLC.
Yeah, so single member LLCs are very, very common in Portugal, and the reason is that there is a ruling from 2016 that deals with partnership LLCs, actually, not with a single member LLC, by the Portuguese tax authority, and people read this ruling wrong. The outcome of the ruling is that certain LLCs income from certain LLCs could be treated as foreign sourced income, or as foreign sourced capital income, which is the type of income that's exempt under the NHR. So from that, a lot of people read or hear about Portugal not taxing LLC income. This is totally not what this ruling says. So the ruling is very, very specific to a very specific set of circumstances. And some of the things, it doesn't deal with the single member LLCs. And what it does, first it deals with it asks the question of whether an LLC from the US that is transparent in the US, which means that it doesn't pay corporation tax, income passes to the individual, is transparent in Portugal as well. And it says no, it's not transparent in Portugal. It should be treated as an opaque entity. It's not necessarily the case that the single member LLC is also opaque in Portugal, because the single member LLC doesn't issue a K1 form. It doesn't pay profits. Profits automatically pass in a single member LLCs to the member. So Portugal could consider a single member LLC to be a transparent entity, which means that if you operate in a single member LLC and you don't issue receibersverdes, then you're breaking the law. And all of the income is attributed to you anyway. So one risk in using a single member LLC is that the income would be considered transparent, unlike what you think. Another risk of using a single member LLC is that it would not be considered transparent. It would be considered the company, but in the same way as S-Corps, the company would be considered Portuguese. This is a more likely risk and a big risk. And then if the company is Portuguese, then it's subject to corporation tax, and your individual income taken from that company is subject to dividend tax. So you think you've saved taxes, but actually you've paid about 15% self-employment taxes, Social Security in the US. You didn't pay in Portugal because you claim that you have no profit. And then you end up, after having paid 15%, you end up having to pay corporation taxes and dividend tax, reaching an overall tax rate of approximately 70%. Yeah, that is the primary risk of using a single member LLC.
Using partnership LLC without foreign links.
We've discussed single member LLCs, now moving to multi-member LLCs. So yes, there's this ruling from 2016 and it deals with multi-member LLCs, and it does say that the multi-member LLC is not transparent, but this ruling was limited to very specific facts and circumstances. And one of them is that this specific LLC was said to not having been managed from Portugal. So it was clearly said that the management of that LLC was not done in Portugal. The other point is that the ruling says that the LLC that it dealt with did not fit the requirements of transparency in Portugal, being either a professional society or an investment asset holding company. First of all, the management part. Even a multi-member LLC is run and managed from Portugal, it could be deemed a Portuguese, again, a Portuguese company, potentially subject to corporation tax and potentially subject to dividend tax. Most people running LLCs from Portugal would be managing them from Portugal as well. So that is one risk that is very significant. The other thing is that a lot of people run professional activities from Portugal and would have fit into the definition of professional society in Portugal. For example, lawyers, accountants, psychologists, and so on and so forth. These were people that would have been, had they operated in Portugal, in a Portuguese company, would have been in a professional society, which is transparent, and therefore the non-transparency rule from the ruling wouldn't have applied. So every multi-member LLC needs to be analyzed, and you have to see whether the management is from Portugal and whether it fits transparency rules in Portugal. Only if you can get through both of these issues, then you could reasonably assume that it would be opaque in Portugal. And even if that is the case, you're still relying on one specific ruling from many years ago that's quite low on fact. So you have to be very, very careful. So we use multi-member LLCs. We advise our clients how to make them compliant and in line with the ruling. But a lot of people are using LLCs in Portugal in a very non-responsible way. And when they come to report their taxes and they ask for our advice, we explain the exposure and the risks in doing that.
Using director for high value activity.
Perfect. So you are here in Portugal and you have the NHR. So we have the NHR benefits. And if you are here, you are thinking, oh, I'm going to have tax exemption. Oh, I'm going to pay only 10% on my pension. Or I'm going to work in Portugal and I'm going to be entitled of the flat tax rate of 20% of the NHR. Yes, the 20% flat tax rate, it's if you have the NHR and also provide a high value activity. What's a high value activity? We have a specific list here in Portugal identifying what is a high value activity. For example, a developer, software developer, perfect. But we have general ones like director. So we have a lot of clients here that are director of their LLC or foreign companies, for example. And when you report, during your tax return, you have a special form that you just need to choose the code of your high value activity, and the director is there. So it's very easy. Director, high value activity, 20% on the work that you are doing here in Portugal. However, think with me. If you're claiming yourself as a director, meaning you are managing your company in Portugal. So the tax authority, if you get audited, can deem that part of your profits, it's going to be considered Portuguese corporate profit. Why? Because the director, the C-level, it's here, living in Portugal and working from Portugal. So, for example, you can deem your company having a permanent establishment here, manage the company from Portugal, and the tax authority can deem part of your profits coming from a Portuguese company, deeming your international company as Portuguese. So you can pay taxes 21% corporate level, and then this distribution is going to be coming from a Portuguese company, meaning 28% dividends. So be careful when you choose the director high value activity.
Assuming tax-free US vehicles such as Roth IRA will be tax-free in Portugal.
So another quiet assumption that our clients have when they come to us is this inquiry regarding the fact that the Roth IRAs are tax-free on the withdrawals in the US, and they truly believe that this same rationale should be used for the Portuguese taxes when they're living here and reporting these streams of income. That's not true. The fact that the US domestic law allows the structures like the Roth IRA, for example, where you will not pay the taxes in the moment that you withdraw them, because you haven't paid the taxes you have already paid the taxes in the past, doesn't make it tax-free in Portugal. You must allocate accordingly to the Portuguese legislation, and it will be taxed accordingly. If you have the NHR, it will be 10%. If you don't have the NHR, it will be the progressive rate.
So as you can see, many laws regarding taxes aren't interpreted the same in Portugal as they are in the United States. And in some cases, Portugal tax treaties may be completely different. So it is very important to make sure that you do your due diligence and consult with a proper tax expert. If you are interested in filing your tax return or consulting with Fresh Portugal, there is a link in the description below and the first pinned comment.
So Fresh Portugal is a tax firm based in Lisbon. We're sitting here at our office. I'm Zé Fischer. I'm the founder. With me, Pedro Abreu and Enrique Faria, both Portuguese tax lawyers in the firm. I'm qualified in the UK and Ireland, and there are people with multiple qualifications in the firm, including the US. And we focus, all of what the firm does is tax and recently also immigration advice to expats coming to Portugal. Very large part of our client base is Americans. We've advised probably nearing 1,000 Americans just in the last 2 years that have come to Portugal. And we also file more tax returns in Portugal under the NHR, specifically expat tax returns, than any other firm. I think we're probably going to file about 400 this year. We deal with the intricacies of Portuguese US, Portuguese UK, Portuguese other countries' taxation every day, almost nothing that we haven't seen. If anyone wants to work with us and wants to avoid the common mistakes that we've just discussed, then we'll be very happy to work with you.
If you want to see more videos about living in Portugal or Europe, make sure to hit the like and subscribe button. This is some guy named Dave in Portugal, and hopefully we'll see you next time.